Good afternoon, esteemed traders and investors. Today is Friday, December 19th. I present to your attention another market review for Forex. As always, I'm glad to be here with you today. By the way, yesterday's trading ideas for gold and the pound worked out. There are also some interesting ideas, and we will definitely discuss them together. But first, let's take a look at the list of news. Today there was a press conference at the bank and the yen continued to weaken. Unfortunately, contrary to our expectations. Yesterday we had the euro rate decision and the initial jobless claims in the United States, as they say. Yesterday we also got important inflation data for the dollar, so overall there was a ton of news and everything seemed to come out at once. The initial jobless claims basically matched the forecast, but the consumer price index changed quite dramatically compared to previous expectations. However, there wasn't a particularly strong move in the euro since the rate was left unchanged by the central bank despite all the significant developments. As you can see, the pound's rate was also left unchanged, but the pound weakened. Let's take a look at what we can trade on the charts. Let's go. So, we'll start with gold quotes on the daily chart. We had a clear trading plan for the price to rise, according to this simple, old-school trading scheme from one of the long breakouts on the platform breakout. That's exactly how it played out. Now, after this liquidity grab, the instrument is in a very interesting position because we have a range between yesterday, the day before yesterday, and now today. But on the other hand, the instrument is standing close to its historical levels. Over the year, it hasn't broken through the platform at the bottom on the fourth pin bar. That's why I think that at the moment there's a high probability of a liquidity grab from below. And only then could we finally begin to dream about some new highs. But first, and this is just my personal opinion, I think that this particular part of the move really needs to play out. The euro-US dollar currency pair was both rising and falling throughout the day yesterday. For those traders who bought on the long breakout that I previously drew for you, actually, in the European session with a 200-point stop, they managed to take 325 points yesterday on that breakout. Basically, that's initiative. Now, by the end of the day, the instrument has deflated and is trading at the bottom under the strengthening of the buck. We still have a platform at the 1.17 level. By the way, that's around psychological level for many. For unbalanced traders who have psychological issues, the 1.17 psychological level is very important. I think it will most likely be broken and the instrument could drop to the nearest, by the way, mirror level. Here, this quote is at 1.16820, so this part of the movement could happen, but there could also be a false breakout of this zone. However, we're not playing that scenario for now. The trading ideas for longs have passed with the update of the actual impulse extreme that we had yesterday. Well, actually, the pattern that appeared the day before yesterday played out yesterday. A buying zone, a zone for aggressive buying. I would say it's much lower, around the level of 1.16545. So, in my opinion, that's where you should be looking to buy. The instrument is still in an overall bullish trend, and everything happening now can be considered a correction. But for buying, I wouldn't set a stop loss at 1.117 right now because that's a trap. It will be broken either by a true or a false breakout, and with high probability.
Looking for real trading advantages? Forex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
Right now, the British pound-US dollar pair interests me the most. Yesterday, the scenario for the instrument's growth played out, a partial growth of the instrument, because just like with the euro-US dollar pair, the pound showed strong bullish momentum, but fell just short of a bullish breakout. And at the moment, it has now stalled at yet another bullish breakout level. Let me remind you, the instrument has been in a slightly bullish trend for quite some time. And if it manages to hold on to the bullish breakout, that's definitely good news for buyers. Let me remind you that this week, the instrument paused its quotes at the level falling short of the 1.37 level. 34,700 is one of the extremes from October. We approached it, fell into a bullish breakout, then caught that move and fell again. And now we are currently standing at yet another significant bullish breakout level inside. with this recent news-driven initiative that happened around the rates, it's quite possible that this third wave could potentially go even further. So, it could potentially rewrite not only the extremes of this week, but also reach the spring highs from autumn, which are a full 1,000 points higher than the current levels. It's an interesting spot, and this could very well happen if the fourth candle closes as it is now. That's already a good setup for continued growth.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
The Australian dollar, meanwhile, is holding weakly at the bottom, falling, but falling very weakly. But we have sales at the highs, which is essentially a hedge against the weakening of the US dollar. With this instrument, there's still room to fall on the lower platform, so we can say that we're hedged. With this instrument, we're hedged against the strengthening of the dollar, even though in other majors we're betting on its weakening. By the way, that's a rather interesting and standard technique in modern trading. And the Canadian dollar has entered a long correction, thank God. Why am I glad about this? Because the higher they push it up, the greater the likelihood of a breakout. The platform I'm pointing to now is roughly at the 137 level, this zone. Of course, I'd like the correction to go even deeper and further. Actually, as you can clearly see, there's a huge wave of US dollar weakening happening.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
The dollar-yen instrument, of course, unfortunately didn't please us today. I showed earlier that there was a good, clear short break at the 1.56 level. But today, during the Bank of Japan's press conference, to put it mildly, they essentially ignored this break, and so did the instrument. Just today alone, it moved an impressive 1,500 points. This really shows that the devaluation of the yen is still continuing. At the moment, the instrument is now hitting the second short break, which is right here. By the way, it was just tested, so for those dreaming of short corrections, something like that could even happen. However, this zone has already been tested once. There was a slight miss here. But basically, for the desperate, let's call it a trading idea for the desperate. The thing is, there's still a platform left below at the 153,451 level. It hasn't been broken. We were relying on this break here, which has been broken. The probability that this will be broken is, of course, high because we've already surpassed many extremes. There are two options here. Either wait for some miraculous breaks higher up and aim for this target, understanding that there's at least 1,500 points below you. But you can also rely on this old break. But the instrument looks downright bearish. It seems the Japanese have said something that, let's just say, isn't very good for the yen at the moment. At the moment, things aren't looking too good. That's why shorts, I think they'll go through. Maybe not from the current level, but somewhere higher. But the higher they push it, the greater the likelihood of a breakout. The situation is reminiscent of what happened in August. Accordingly, remember, there was a range here as well. They kept testing it over and over, and then they finally broke through. The breakout was false, but it happened. This kind of thing happens regularly. I think it will be about the same here. The same story.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
As for oil, in fact, Trump's indecisiveness is pushing crude further down. There's no break of the 55 floor, the instrument is moving lower, and for now, there's nothing interesting for us here. Bitcoin, for some reason, isn't falling. Still, it gave a third wave from its impulse, breaking through the base of the impulse. That's already quite a lot. Those who participated in this movement did well. That is, there was an impulse, a pullback, and the third wave went through. Now the instrument is sitting right on the 15-minute short breakdown zone. If you're selling right now, your stop losses should be set above yesterday's high, so your take profits should be much lower, meaning that right now the risk-reward ratio is about 1 to 2, 3, 3, or 4 to 1 from the current prices with a stop above yesterday's high. As for the dollar franc, the instrument is closing the trading week. It's a rather sad situation, so let's use a clean and straightforward template, specifically a small weekly candle. After a period of strong and powerful selling, in my view, the overall trend is still bullish. It was last trading week in particular that was quite disappointing, and now this bullish trend is just starting to try to emerge. The trend's second point was based precisely on this pin bar. At the moment, the wick is currently closing below this important mirror level, which strongly suggests that the previously bullish sentiment for dollar franc has cooled off a bit. So, please be careful and do not go too heavy on your long positions. There's a lot of money here. Currently, both below and above, and then below again, but the bearish breakouts are now happening on top. Friends, InstaForex offers a free consultation with a personal trading consultant. Follow the link in the video description, fill out the callback form, and gain access to exclusive offers and special trading conditions. BRT Plus for risk-free trading. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.